upon the breakout, gold's going to make a new all-time highs.
Gold-backed ETFs seen inflows of over $5 billion.
$0.8 trillion gold market.
Why are we the only guys that seem to understand this?
Makes your head spin. Hey, welcome everyone, wherever you're dialing in from all over the world today. We're excited and happy and fired up because we have a special guest with us today on Talking Gold with Andrew Maguire. We have none other than David Tice, the founder of David W. Tice and Associates, LLC. It's an investment management and research firm. In 1996, his firm started the Prudent Bear Fund to give individual investors a chance to protect themselves against the declining stock market. All right, timing is everything, and that's why I'm so excited. And I know you're going to really appreciate this interview with Andrew Maguire and what he has to say. Just to give you a little bit more background and why you should listen, David has appeared on the Nightly Business Report, the Wall Street Journal Report, the Wall Street Week, the O'Reilly Factor, and for years he's been a frequent guest on CNBC and Bloomberg TV. So with that, it's my pleasure to go to Talking Gold with Andrew Maguire and our special guest, Mr. David Tice. Over to you, Andy.
So thanks, Shane, for that. And this is a real treat today. We have somebody who I've been really hoping would come and honor us with his appearance. And for those that don't know, his name is David Tice. But I mean, amazed if you wouldn't know him. But David is, he goes way back. I mean, David began his investment career, oh God, it was 1988, I think. He started publishing something called Behind the Numbers. And that was really well respected and investment research service. I mean, basically, as it said on the box, it was about quality of earnings, warnings, and sell recommendations. That was on the box. And that was followed by well over, I know for sure, well over 150 money managers who I think they managed somewhere in about $2 trillion in those days. And I mean, good God, if you adjusted that for inflation today, that's probably more like $6 trillion under management today. But what really sets David apart from the crowd is it's his ability to identify short sales of overvalued stocks and indices, but offset by being long mining companies and gold to achieve this sort of negatively correlated investment return profile. So I don't know anyone who has that depth of experience, especially as we go back then when there was nobody that could that understood this dynamic. Now, we have to remember, guys, this was a time when gold was never, ever spun in a bullish light on the mainstream media. And for us gold investors and traders, it provides absolute amazing value to take that step back and look at this bigger picture as he weighs up the views of stocks versus gold. And with that said, David, it's such an honor to have you here today. Welcome.
Well, Andrew, I don't think I've ever received such a glowing introduction, so thank you very much. It's really a pleasure to be with you. I'm honored to be on this show. You have been such a asset to the gold market as well, talking about the physical versus paper dilemma that I've also talked about, for quite a while, not nearly in as articulate of a manner as you do. But anyway, it's been quite a period going back to 88, and I ran the Prudent Bear Fund from 1996 to 2008. And as Andrew alluded, I was an advisor to institutions telling them what stocks to be short. And therefore, I parlayed that into the first mutual actually short stocks and professionally managed. And we could essentially be used as a component to an individual's synthetic, their own hedge fund by utilizing our short sales and then their own long side. And I warned about the market back in 96, 97, 98, and 99. Now I was way too early, and people look at my career back then and say, what were you doing? Thinking the market was overvalued in 96. But that's when Alan Greenspan made his famous irrational exuberance speech.
Yeah, and I do remember that time. And in fact, I know you've moved on to so many other amazing projects since then, but I will just never forget. I used to look forward, and we're going back to that period you're talking about, 96 to 2000. And I just look forward to your almost daily appearances on CNBC. It baffled me that they would even invite you on, because you would come up with, I mean, these are rah people bumping up a market. And it was just so fantastic to see you taking these market cheerleaders and provide this rare balancing view against this incredible, buy everything mantra. And which really wasn't serving people very well at the time, as you were pointing out. But I recall you warning in the year 2000, about the ballooning tech bubble and the valuation insanity that was surrounding it. This was a time when every taxi driver had a winning stock pick, a bit like now maybe with Robin Hood and his merry men. But I recall you as the lone voice, and I mean that sincerely. There was nobody else out there arguing your case just before the bubble burst. And I think, if I remember, I mean, it's burned in my mind, it was March 10th, 2000. And that was the exact point the NASDAQ imploded, something like 77% or something like that, directly after that. I mean, those of us that listened to you were well rewarded, and I thank you very much for that. But in fact, didn't it take 16 years to recover that level? Now, but I do have a question though, David. Although the NASDAQ, and how can you ignore, has recently ballooned really to more than double its 2000 highs, there's likely some parallels here, are there not? Can you give us your view?
Oh, there's certainly some parallels. And just to kind of close the door on you talking about that 2000 period, I did want to point out that, I'm very proud of the fact September 21st, 1999, I actually put up a lot of money for me and sponsored what we call the Credit Bubble Symposium. And we held it at the Waldorf, and we had 9 PhDs speak about the danger of this credit bubble ending. And it was actually covered by the front page of the Wall Street Journal the next morning. And so we later on took that video to Congress and warned government officials, and that really pretty much coincided with the top. But going back to today, this is craziness today. I mean, you just look at Tesla yesterday going to 1,800, and then at the end of the day falling back, slightly down on the day to under 1,500. And you look at the fact that Tesla's market cap is now greater than the 3 biggest car makers, market capitalization companies in the world: Volkswagen, Toyota, and Honda. That's unbelievable that we have this level of speculation. And Tesla just had its first GAAP profit, only a quarter ago. And the Robin Hood holders of stocks and what they're doing, and I think they've taken their money from from the government.
Another important thing that sticks in my mind: you successfully ridden the short stocks long gold trade. Now, even diluted paper gold has outperformed the S&Ps, and I saw you recently talk about this, and that's since your call in 2000, and we've noticed a notable bullish divergence, most recently, which happened on March the 23rd, where gold overcame inverse selling pressures. Now, with the Fed put in place for stocks and a collapse evident in real yields, I guess the question I have is, and especially for you, until the stock market bubble pops, do you actually see gold now rising with stocks for a while, or is that game done?
No, I think gold is going to rise with stocks. And let's talk about the short selling versus gold. And as you mentioned in the first part of the interview, I strategically chose to couple gold stocks with being short. And one of the things that I saw was that, again, reckless, aggressive central bank maneuvering printing money, quantitative easing, and the like, and that would make it hard to make money being short stocks. And therefore, I said, as a counter to that, I should be long gold stocks. And in fact, taking this forward to today, I've essentially, I'm not as excited about being short stocks today as I am being long gold stocks, because frankly, being long golds and gold stocks is more of a sure way bet, because no matter what the Fed might do, no matter if we get into true MMT, and there's massive and aggressive stimulus, it's going to be good for gold, and it might make stocks continue to go up. And therefore, gold is certainly, a trade that should be put on that has very little risk, in my opinion.
Yeah, so those people that are basically, and I know, I think it worked until a little bit until March 23rd, but basically there were a lot of people that would just simply, almost like create an algo that would, if the S&Ps were rising, they'd sell gold. If gold was rising, they sell the S&P. It was kind of a senseless one, because there's no argument for that. But I think it was interesting because I think this also kind of brings me on to, this leads us deeper into gold, really, because again, I have to key off the fact you were the earliest mainstream commentator to draw attention to this so-called barbarous relic. And again, this was back in 2000. You also, if it wasn't enough, you also launched the Prudent Global Income Fund. Now, this, just so people know, this was geared to benefit investors from a weakening US dollar and rising gold prices. Well, does history rhyme? I mean, wow, David, that was so well timed. And I mean, good God, we were talking about here, as the trade kicked into play, that was when Gordon Brown marked the bottom of the gold price in US dollar terms. And I said, given what you're just saying just now, we should all take note, I think.
Well, thank you. I mean, it was a interesting fund to run. We actually included gold in this multi-currency fund that was set up to defend investors against a decline in the U.S. currency. And we bought the Norwegian krona, and we bought the Swiss franc, and we had some gold bullion that we held under the Zurich airport. And that fund did very well for a few years.
Yeah, and think of the timing of that. I mean, what gold was like $230, $240 or something at that point. I mean, God, there'd be many, many people that would wish they'd have an opportunity like that. And I'm just kind of wondering if 1800 isn't kind of like the same place we are now, even when you comparative.
I believe that we have a long way to go with the metal, because we have a unparalleled dysfunctional global system. And you look around the world, the BRIC countries have been recoiling against this dollar standard, and it's made it very, very difficult for emerging nations. There's a lot of countries that feel as if we need a new Bretton Woods or a new Plaza Accord. I think there are back meetings going on at the G5, G7, G20, I think, talking about this. The U.S. doesn't want to receive a pay cut, in any of these reconfigurations, but I think something is going to be coming down the road, and I believe there will be some gold backing for some kind of reconfiguration.
Yeah, some sort of a forced reset in a sense. But, in the middle of all my whistleblower efforts, which was, again, 99, 2000, all around about this time, you were asked to testify. You just alluded to it. You mentioned it before Congress regarding, it was conflicts of interest of Wall Street and the consequences. I think it was titled The Consequences of Capital Markets That Lack Integrity. Can you expand on that? I mean, did this influence anything?
Well, we know Congress has lots of hearings, et cetera. And, I remember that, testimony very well. And I think we put together a 50-page book, and everybody else on the panel only, created 3 or 4 pages. And I feel as if, but, frankly, I believe that potentially a few more Wall Street firms started to provide some sell recommendations, because to that point, it was like 97% buy recommendations and very few sell recommendations. But it didn't change very much, frankly.
Well, it was a voice, another voice, and I think history will look back on it, in a very, very golden way. At that time, the same time you were asked to testify at Congress, this was also a time when gold manipulation was being talked down as a complete conspiracy theory. If you remember, the industry apologists, like trolls, they were all over in fact, there's still 1 or 2 around there, still denying it. But in fact, it was when it seemed that this cabal of central banks, it was at a time when they had full control of the price of gold. Now, in retrospect, this was when the short sellers moved in onto the slippery slope, and I'm talking about short sellers in gold, and entered a battle, I think, clearly they are about to ultimately lose. Now, David, I was going to ask you, what's your take on this? And where do you actually see us in this gold revaluation process that you're kind of just alluded to, especially as we witness this massive draining of paper market liquidity into the physical markets, clearly accelerating this process and forcing discipline on these embedded positions?
Well, you are much more in touch, and I go to you for wisdom about, where we are for the nuances of the physical market. I understand that we've been in backwardation, for a while. I'm not sure if we are there now. Again, your listeners are blessed to have your wisdom, being provided in that realm. I just know that gold breaking through 1800, that was a big resistance level, given what is happening with central banks around the world, especially in the United States, where the Fed's taken its balance sheet from 4 trillion to 7 trillion in just a few months. I mean, we've never seen anything like that. And we have, even the Republicans are not really talking about financial discipline at all. Checks can we write is essentially the attitude. And with that kind of attitude, gold is going to do exceptionally well. And some inflation is going to start picking up. I'm hearing more and more stories about food prices are definitely picking up a lot lately. We're in this period of a solar minimum, which is likely to increase food prices dramatically over the next 5 to 10 years. I think that once inflation gets started, then it can be, a runaway freight train. And once the gold price gets started, and once the other thing in terms of gold stocks, you look at gold stocks are starting to generate, huge increases in EPS and in free cash flow. I mean, back 20 years ago, a lot of gold mining companies couldn't generate GAAP EPS. Now companies are doing that, and they are generating year-over-year growth rates like we haven't seen in a long time, at the same time that industrial companies are experiencing declines in earnings and cash flow. And therefore, that's going to bring in generalist investors to gold stocks. So we're very, very early in this. We could have some kind of a monetary reset. Typically, these periods of gold price escalation tend to last a while once they get going. And frankly, we're only about 35% up, and it's going to be several 100%, in my opinion.
Oh, I totally agree. And I think so many people have been jaded over the years and just literally thrown their hands in the air and said, you know, obviously the whole point of this, of creating the COMEX in 1974 was really to inject not just paper market liquidity and swamp the real value of gold, but also incredible volatility, which really turned so many people off who just threw their hands up, especially in silver. My goodness. But I think, you know, we just mentioned, you know, whether the gold's in backwardation or not. In fact, really, I think what's happened, we have such a change. This is a fundamental shift. And I think this is what's really exciting me at the moment about this, what we're talking about, this ultimate revaluation, is that there used to be a big lever you could pull, which was basically, if you went on the over-the-counter market, which is 10 times the size of the COMEX, as we know, and literally, you would then, in the over-the-counter market, which is essentially a foreign exchange cross, as you know, then you would be, if you shorted shorted gold against the dollar, you would actually be paid a positive carry. So that's huge incentive, of course. So, you know, plus a little bit of tweaking here and there, that created a situation where you could control this huge foreign exchange market called gold, or silver for that matter. And that reversed on March the 23rd. And what happened was we deal with a lot of, obviously, Swiss banks, refiners, so the biggest trade, in fact, the largest European silver traders, and second-tier banks that really provided the liquidity into the COMEX. It was the key liquidity that made it real, the only bit that made it real. And these guys got so badly burnt on when the EFPs blew through the roof. I remember, I'm sure you know, there was like $100 premium at one point between spot and the futures. Well, what's happened is these guys will not come back. The trust is lost, and they simply will not use the COMEX as a hedging facility anymore. So really, illiquidity in the over-the-counter market is forcing a physical solution, a more physical solution, because I know a lot of compliance officers, and I've spoken to some of these guys who've said, look, we refuse to let you hedge anything on the COMEX. So it's interesting. So really that reduces what was perhaps some degree of real physical liquidity that populated the COMEX into probably less than 1.5% right now. But so it's really interesting, because when you bring your side of this world to us, and we step back and look at this much bigger picture, I think it forces us to think in these unrestrained terms. You know, we've all been subjected to so much bullshit in the past, and that's the first thing I run into with people is they go, yeah, but you know, it's so volatile. But anyway, look. So that's just my view to back up what you're saying, and I think that is 100% correct. I don't think we'll see backwardation again. I think because the real price, the closer price, is probably what we're seeing on the COMEX. I mean, good God, if you look at the July silver contract, which is in delivery, good God, I mean, you're still looking at a 25 to 30 cent actual contango, a premium over spot. Well, that's ludicrous. I mean, what kind of a beautiful arbitrage trade would that be? But right. No one's taking it, and that says it all. There's just no trust there. I mean, in this instance, obviously, the silvers are probably in the hands of just one bad actor. But never mind. We see the same with gold. You see, only when we see good smackdown do we see it coming anywhere close to contango. I think the real price is now become the COMEX price, which is a complete flip on its head of how we look at the markets and how us as wholesalers we look at the markets. But so I was going to ask you have a company currently called MTCM. I think that manages pretty much long exposure to precious, to what you were just talking about, precious metals, equities, silver, and interestingly, Bitcoin. I think at something like 5%. Now, as well as, you also bring in some of these smaller mining equities, which you were just talking about, a great value. Now, within this space, you see a potential to uncover really what sounds like extraordinary risk-reward potential in this current environment. And how is this being received? I would imagine you're getting a lot of institutional interest in this company.
So I just joined my partner, Garrick Moran, and the name of the firm is Moran Tice Capital Management. And we are excited about providing what we call fiat money defense because we are unquestionably in this period of fiat money. And therefore, I'm going back to where I made a lot of money and created outperformance inside Prudent Bear, which was buying precious metals equities. And that allowed, the Prudent Bear Fund not to lose money in 3 different years when the market was skying. And again, as I said before, I've pretty much, dismissed short selling in this particular fund, but I've got great interest in silver and then interest in potentially, depending upon how it acts, 5% in Bitcoin and Ethereum. Because I feel like the dollar is being assaulted. We're in a period of potentially losing our dollar's reserve currency status, and we're likely to have inflation, and therefore investors need to be able to have a defense in a one-stop vehicle. Now, in terms of, we're just starting marketing. I've just joined the firm recently. We just got all our paperwork, complete, but we're really excited about the prospects and performance of my partner's SMAs, has been exceptional over time. This is a guy that's really, torn apart reserve reports and, press releases and understands the sector very well. Most of our companies are going to be intermediate to smaller producers, but then there's going to be a component, probably about 1/3, that's going to be more exploratory oriented, where I had a lot of success inside Prudent Bear. And some of these companies, the valuations are just so extraordinarily, cheap relative to the bigger mining companies, or relative to the gold price, or relative to the S&P. You truly look at, all the metrics, and this is a perfect storm in terms of valuation.
Yeah, and I think it's so interesting because I think, we also, we have to think of the entire, this brings us onto the subject of digital gold. And so clearly the trustless blockchain rails becomes the perfect solution to digitize physical gold into small enough amounts to use it as a currency. Now, I guess what I'm leading to is, as digital gold becomes a fellow traveler with the likes of Bitcoin, Ethereum, etc., and the demand for physical gold will then has to exponentially increase, because blockchain technology is going to kill this paper gold game. This can only be good for all gold investors, yes?
Yes, and that's clear. And I think that having one of gold's disadvantage is that it's hard to break it down, obviously, into grams to be able to buy something. And then that's what makes silver appealing. And I was just listening to David Morgan recently, who's been, I'm sure a friend in a long time, silver bull, and I love silver as well. But having being able to use blockchain to be able to fractionate gold, is truly a great addition to the equation.
Yeah, and it's indisputable that it's, forget unallocated gold, forget any of that stuff now. It brings trust back. We were just talking about the lack of trust. For the average person, and let's face it, it's the average person that are adopting this for everyday use, for everyday, in everyday thinking, that feel confident that, yeah, but you know, it's on the blockchain. I know it's right. You don't have to understand cryptocurrencies. Most people understand blockchain is simply a financial mechanism to track. And I think so, you know, in fact, really, I spoke to somebody the other day who said, you know, how do I know these bananas here on this shelf are organic? Well, but ultimately you will know if it's been on the blockchain. So everything will take, everything that goes on the blockchain rails will bring confidence. And for gold and silver, of course, that's really good for us, because it eliminates, it's one more step to eliminating this paper game. But I think what just intrigued me just a moment ago, you said, I was going to ask you, what are your thoughts on silver? You just said, you believe in silver as, I mean, if somebody was going to, obviously, we all agree that everyone should invest in both physical gold and silver. Would this be a better time to be actually putting some heavier weight on silver? What would you think?
I think so. I mean, you look at the gold-silver ratio. I mean, we've never seen it, you know, this low. And silver has certain other advantages to, you know, in industrial uses as well. You look at past cycles, silver simply is creates amplified gains, you know, later in the cycle. Early on, gold does well, and then silver does better. And in this kind of an environment, especially coming off this low valuation level relatively to gold, it's a perfect setup.
And I think what is also helpful, obviously, I always look at things from because of the evidence that I read about the manipulation in gold and silver, and how it was the guys actually sitting on the fix who were telegraphing where the fix would be the following day. And again, this is all part of the DOJ stuff, but I mean, but essentially, I think what's happened is on July 29th, June 29th, which was first notice day for the July contract, then everyone was puzzling, well, hang on, what's JP Morgan putting up nearly 6,000 contracts for? Well, actually, what I actually believe that, and from the information which I know that these guys, these bad actors, are the same guys that we provided evidence to the DOJ for. I think what's happened there is that they were simply told to start unloading these heavy concentration of positions, and to get in line with at least what is supposed to be a 3,000 lot, an increased 3,000 lot position limit. And I think that's got to be a bit helpful, because if you lose the concentration of a position, then perhaps that would tell me that you may as well start thinking about, you know, these guys will probably be thinking about, look, we're on the right side of this now. But what's interesting is that the way they did it was, we talked about, at that day, there was a 30-cent contango. So what they were able to do was sell every darn ounce of it at a 30-cent premium and buy it back at spot and dump it into the over-the-counter market. I mean, so not only did they get the DOJ monkey off their back, they've actually made, we estimate, probably 9 million in just simply transferring the ounces back into their own name in the over-the-counter market, and yet they've escaped the regulators in a way that only JP Morgan could have done it. But I think it's positive that we lose this sort of this bad actor. So yeah, and I think I just wanted to sort of say, I think that's an extra plus for silver. But the one question with now us limeys here, we don't understand your politics in America, and I mean, and I think as much as we love the Orange Moses very, very much from what we hear, what's your take on the US election? And what if Trump fails to get elected? what do you think how would golden stocks react? I have no idea.
Well, I think it's certainly possible now that Trump will not be reelected. And I, am open about my politics. I am a Trump backer because he is, even though all his personal character flaws and potentially how he is, screwed up in handling COVID-19, what he's done, in terms of standing up to China, standing up to, for rule of law, et cetera. I mean, we frankly have no other choice. And what he will do with the Supreme Court, et cetera. I mean, gold is going to do very well no matter who's elected. I mean, I think we haven't had much financial discipline even under Trump, but under Biden we'll have less. Tax rates will go up a lot. We will go more and more to a welfare state. All these actions are conducive to a rising gold and silver price.
From gold and silver valuation perspective, I suppose it really doesn't matter because, I mean, we're in so deep. I mean, and it's, to me, it's this paper to physical dislocation that's now already spooked the embedded short sellers to an unprecedented degree. Never seen this before. And obviously you understand that game probably better than anyone, but if you only have to place yourselves in their shoes for a millisecond, the synthetic lever has been wrenched from these insiders' hands. The old adage comes in play: if in doubt, kick it out. And as somebody who really understands the implications of short selling, especially as it relates to gold and silver, the trouble being encountered by those trying to unwind these paper shorts, and we see this scramble around moving averages, they're desperation attempts, but people are buying every dip. Why? Because the physical market is so strong. And I think, basically it's the supply, it's huge demand for physical gold and silver that's underpinning this dwindling residual real open interest that we just spoke about a minute ago. That's probably like 1.5% of all the trading volume on the COMEX is anything that's near real. And I think really this is attracting, like the IG9 situation, this is attracting sharks. People who've never been interested in gold, they smell blood in the water here. And I think, only have to look at this situation and realize, hang on a minute, you've got such a huge imbalance here. And whether you're a gold or silver buff or not, or an advocate of it, it probably doesn't matter, because at these points, these guys are saying, hey, there's a profit potential here because we've got this massive imbalance. And I think we're already starting to see some evidence of that. And that's why I think we've moved from a sell the rally kind of market to a buy the dip rally, as these shorts are using every tip to get themselves out. But is that something that you would agree with?
No, I agree completely. I mean, there are several different components to what you just articulated, but one is the momentum is just going to get stronger and stronger on the physical side. And the physical side is people see how much money's being printed, and they see the lack of financial discipline, and they see the Federal Reserve's balance sheet, and they see the rest of the G5, what's happened to their balance sheets, and they understand that, and then their feelings are being confirmed by the price action, breaking through 1,800 and gold stocks picking up, et cetera. So it's just going to get greater, and the greater it gets, the more it's going to, create these aggressive positive action in the gold markets.
Yeah, this is coming from you, that is also good to hear, because I know you're a man full of integrity, and you see it, you say it as you see it. So, but I think this has been so helpful for people who us gold and silver people who tend to be a little myopic about, the ins and outs, that people are worried about a 10-minute chart. No, it's good to stand back and say, look, here we are. Since 2000, the gold has outperformed the S&Ps. Most people are gobsmacked, as we put it in this country, that it's possible. Really? And it's like, no, better take a closer look at this. And it's like, so now we've got all these other dynamics coming on. I mean, even if nobody else bought gold, the valuation metrics, when you put all these trillions of dollars in there, simply it has to be $2,500. But most of the liquidity providers I speak to now say, well, even if nobody bought any more gold, it should be $2,500, and at a minimum, at an absolute minimum. So in that respect, no one's offering any size, and they say we're not going to offer any size below 2,500. Okay, there's supply coming in. Obviously, it comes from mines and one thing and another, but really people are hoarding it, and it's much like our good friend Hugo Salinas Price. He owns a gold mine. He refuses to sell a single ounce from his gold mine. I love the guy, but I mean, really, it's because the smart people know that the price of gold in dollar terms, in any fiat currency terms, is clearly undervalued. But I want to thank you so much, David, for providing us like this bigger view, this view of how gold interacts with the rest of the pieces of the puzzle. But I had a chat with you a little earlier. You mentioned you are actually you're about to launch a film. Can you tell us a bit about this film?
Sure. So I'm working on a documentary. This is really a passion project for me. I've been a geopolitical student for some time. I've had a ex-Russian defector in my living room talking about, the threat that Russia and China pose to the United States down the road. And frankly, I feel like the American public is very complacent about not just the threat of our adversaries. Now we have Iran and North Korea at risk, but then to our civilian infrastructure, which is our power grid. Our power grid is frankly unprepared for either a cyber attack, what's called an electromagnetic pulse attack, an EMP attack, or physical attack, or even a geomagnetic storm, and that's called a GMD. And NASA has said that the risk of a severe, solar storm parallel to what happened in the Carrington event back in 1830s is essentially 12% per decade. The risk to be in a flood zone, according to FEMA, is 10% per decade. So essentially the whole nation is at greater risk of this Carrington type event than we are you owning an individual property and being in a flood zone and requiring flood insurance. So our utilities, our legislators, our Department of Energy, our Department of Homeland Security have essentially done very, very little in terms of protecting our power grid. And frankly, there are fixable solutions out there. So I've been working on this documentary. It's going to be out in a couple months. The website is griddowndoc.com. And we are going to be talking about the risks, and then we're going to create some outrage that nothing has been done. And we will show hope, because there are initiatives taking place right now that are showing that cost effectively we could protect the grid. But frankly, it's an abomination that nothing has been done. And we have testimony from Senator Johnson from Wisconsin talking about how he doesn't want to be in the dark and not having done something. So I feel like the American people can get behind this and stand up to our legislators and make something happen. And so I'm excited about it.
Oh no, extremely so, and definitely that's the first thing. I didn't know anything about this until we spoke just before we got online here, and I think that's something that we're going to do right away. So what you're saying is there are solutions, and what we need to do is get people involved, get people to understand it, to make a noise about this.
And one of the things we're doing in the film that I'm excited about is with just a few clicks of your mouse, you're going to be able to send a customized letter, that we've laid out to your 2 state legislators, to your 2 senators and your U.S. congressman, to the chairman of your utility commission, to your FEMA director, and to your adjutant general heading up your National Guard, saying that you want to be on top of this. And then a portion of your, what you'll pay us to watch the film will be allocated to 501c3 organizations that have some personnel that are aware of this issue, that are warriors on trying to get these legislators and lawmakers to follow through. And so I'm excited that this film is putting together, some of these follow through elements that frankly hasn't been done before.
Well, you certainly have our support, and we're certainly going to find a way of getting this link and out to as many people as possible, because it has been a real concern, because obviously every one of us kind of put our heads in the sand and think, well, what can we do? But what you're saying is there's something that can be done. And I think that's important to understand.
You think about comparing this to the pandemic. We ended up doing massive tests. We've understood a pandemic might be coming. And so it was relatively simple. Just own enough masks, own enough PPP and PPE. And we didn't do that. And then frankly, we've been stuck, in some early government responses due to not having enough masks. Well, if a EMP or cyber attack truly brings the grid down, the country is so unprepared, the number of deaths could be 1,000-fold, what we're talking about with the COVID-19 virus.
Yeah, really important, David. And I thank you for that, for that information. And definitely we shall, as I say, we're going to get this out to everybody. But David, you know what? Please promise you'll come back again at some point. And last time I saw you was in Dallas. I think we were having a nice beer, and I think with Bill Murphy was there. I think. Yeah, really cool. So
Bill is truly a great patriot, and I can't say enough about his GATA movement and Chris Powell. So
absolutely, and Chris Powell. Yeah.
Oh, I do have one other point I wanted to make about gold that I don't think we mentioned.
Sure, yeah, please.
And it's the fact that gold, you think about it being an investment, but then frankly, these days, gold is cash, and when you think about so many people have big cash balances and they think they're being safe and prepared, but your cash balance your checking account is a liability of the bank. And even in those early days of March, if you wanted to go take out $100,000 of cash, they tell you to come back next Thursday, and they'd say, well, maybe we'll give you 10,000. So today, Americans that hold, big cash balances, they've got to get permission from the banks to give you your money back. And these days, and it used to be, well, you wouldn't want to hold gold because it didn't earn any interest. Yeah. Well, these days, the banks aren't giving you any interest anyway. And therefore, it's a no-brainer not to have more gold. And frankly, buy a big safe or bury it in your backyard or utilize some vehicles. But it is, frankly, an unparalleled opportunity not to own gold as a cash substitute.
Thank you so much, David. Really look forward to it again.
Yeah, great.
And seeing you in Dallas next time.
For sure, for sure.
Okay.
Best to your listeners.
All right, there you have it. Talking Gold with Andy Maguire and his special guest, David Tice. Thank you so much, gentlemen. What a great interview. And yes, the importance of digital gold is here. It's here to stay. So I hope you liked that interview. I knew you would like it. And with that, make sure you subscribe to this channel if you want. Every time it updates, it'll automatically notify you. Like it, hit that like button, and also share it with people that you know, like, and trust. All right, so with that, again, my name is Shane Rand. Thank you so much for visiting us on Live from the Vault, and we'll see you next time. Bye for now.